appreciate everybody for jumping on here. I see a lot of familiar names, some new ones out there. Shout out to you if you are an existing partner of ours and are currently working with ROK, or if you're brand new and looking to learn a little bit more about rocking out with us. We're super duper excited to have you guys on with us. That's for sure. Steve and I have been planning this webinar for a few months, actually. We were kind of backed up for topics there for a little bit, and it's definitely exciting to get a chance to jump on and talk about the SBA finally. They've been in the news recently, talking about potentially coming out with their own product, and there's a lot of noise in commercial finance always. That's what we're here to do. We want to clear the noise. We want to have a conversation with you, answer your questions, hopefully provide a ton of insight into how you can leverage SBA loans through our platform, but ultimately just providing a good base for you to build your own SBA brokerage or business around. That's our whole goal for today. As always, if you guys don't mind, throw in the chat who you are, where you're calling in from. And whether you are a partner or not. You can see some of our partners already jumped in and did that for you. Shout out to Tom Reed. I saw Geneva in here. I see Elvira. I see a lot of new people, new from Colorado. Love it. George from the BLB down in Georgia. Shout out to Albert Franco, longtime partner. Love it, guys. Wow, we're flying in here. Gotta have a bunch of people on. I will tell you, there was over 1,500 people registered for this event. So we are expecting to definitely creep up here as we just kind of pass the start of the hour. Again, if you're just joining us, who you are, where you're calling in from, whether you're a partner or not. Love all of the interaction here, guys. The more we interact, the more this is going to be about you. Super duper excited to kind of get things started here, and really just excited for today's topic. We're going to get this presentation rocking for you. Again, shout out. Look, we got literally the whole map filled from Tennessee to Kansas City, Stony Brook, right up the block here. Hopefully by the end, Gerald's either in our office or at least referring business. So what we're going to do is we're going to share our screen here. Jen's helping me out on the back end with some of the clicking. So Jen's going to get us all set up here and get us into the mode where we can answer your questions, but also kind of just flip through this quick presentation. And ultimately then be able to go into a live Q&A with you guys. So if you've never been on one of our webinars before, Steve and I are starting to become vets at doing these things together. But we are super duper excited to answer your questions. It's just a lot of that stuff may actually be answered throughout the presentation. So feel free to drop things in the Q&A. Feel free to drop things into the chat. We will be doing a live Q&A session at the end here, but also you may get your questions answered right here in the presentation. Definitely excited to get things rocking. As I mentioned, I'm Tony Cimino, our VP of Business Development, and my role here is partnerships, guys. So if you are a prospective or existing partner, you probably get a couple emails a week from me. Light email marketing that goes on from us, a couple success stories, maybe a reminder or two about the webinar, maybe an email here or there outside of that, but not too many emails, maybe a text message or two, nothing crazy. But Steve has been a welcomed addition to our staff over the past month, now 12 months, right?
Coming up on a year.
Yeah, just about a year. We've been rocking out together. Definitely excited to get a chance to talk with Steve today. Steve is our Director of Commercial Finance. Steve, what does that mean?
So thank you, Tony. Yeah, my role here with ROK Financial is such that I'm the Director of Commercial Finance, as Tony noted. I oversee our activity relating to our commercial finance division. So that includes products, more traditional types of lending products, including, of course, SBA lending, commercial real estate lending, equipment financing, asset-based lending, AR financing, supply chain financing, really anything that's more traditional, typically secured in nature.
Yeah, and don't worry, guys. We have a slide for this later. Don't want to make you have to rewind the webinar here, but we'll definitely make sure that we give you guys a good breakdown of what it is that we do, what it is that we do and how we do it. But also feel free to take our contact info. Steve and I are definitely excited to chat with you about any potential referrals or what we're doing and how we're doing it. Always like to take a chance to kind of tell our story for a second, because at the end of the day, it's what makes us unique. We're a group of individuals that have been in this industry, most of us 10 plus years, Steve going on 25 plus years in commercial real estate. And
yeah, this is year 23 coming up on now.
Yeah. So we're just a bunch of individuals that have all done this for a really long time, in a way where we've built successful brokerages in the past, basically going to business owners and allowing them to establish a relationship with us directly. What we found during COVID was it was actually the indirect business where we could make the biggest impact. And that's where we are today, guys, is we've completely shifted our focus. 100% of our business comes through you guys, comes through our partnerships. So that's what we're here to talk about today, is specifically how to utilize us for SBA. But ultimately, you'll have a good idea how to utilize us, as a full service broker, by the end of the presentation today, for sure. So just to kind of dive right into it, right? What is an SBA loan? What makes it different than, some of these other products out there? Well, the first thing that I always like to make apparent to everybody is the SBA actually has a couple different products. And we're going to go into the ins and outs of those products. So I don't want to give too much away before we go into it, right? But what makes the SBA unique is you're not only having to be approved by the bank and meet bank or lender guidelines or funder guidelines, but you're also having to meet the qualifications of an SBA borrower, right? And, there's so many different uses of funds, and that's what you'll really learn today is, a lot of people, they're not necessarily aware of all the different ways that you can leverage something like the SBA. And, there's a lot of red tape, I guess you could call it, or certainly a ton of guardrails, as I would call them, right? That as long as you stay on, in your lane and stay on the road, you're good. The SBA can be a great product for you to leverage. What is it? The guarantee per guarantor is $5 million that you can access, right, Steve?
Yeah, so the standard SBA 7A and 504 loans go up to $5 million. That's where the SBA, the Small Business Administration, which, as Tony noted, is a U.S. government agency. That's a part of our U.S. government. It's a division of our U.S. government. It's some have specified that it's the only division of our U.S. government that operates in the black every single year. And what that means is they annually produce a profit. That's extra piece of information, useless info. So, but they act like an insurance policy for the bank, right? 100%. So in the case of default, if that loan that is issued through an SBA program goes into default and it's deemed uncollectible, the SBA is providing coverage up to a certain percentage of that loan amount. They'll cover a certain percentage of that principal for the bank, making them whole on that portion. Yep. Again, acting like an insurance policy in the case of default.
Yeah, and what does that really do for the bank or lender, Steve?
Well, yeah. So I mean, that's a really great question. We can get really deep with that.
Keep it high level.
Yeah. So the first and most obvious is that it provides the lender with a great deal of comfort. Right? Security.
What's the word that lenders look for that they're trying to mitigate?
They're trying to mitigate risk, indeed, my friend. Always looking to mitigate risk. And with that insurance policy being there, of course, let's just think about it in a quick example, right? If they have $1 million loan amount that goes into default, $1 million balance, and it's a 7A loan, and the SBA is granted to cover up to 75% of that loss. That's a $750,000 deposit that the bank can expect to recuperate for that loss, assessing their risk at only $250,000. So they can underwrite with a much greater deal of comfort, a much greater deal of security going into that loan.
And not to to cut you off, right? But like, just think about it from the lender perspective for a second. You can go out and lend $1 million and really only be on the hook for 250K, but your return on investment is going to be based on that full $1 million loan amount. Right. So like, as far as spurring the economy, you can see why, the federal government would get behind something like this.
Certainly.
Whether you know this or not, 99.9% of businesses in the United States are small businesses. Right. So 99.9% of businesses in our country qualify for this based on their designation as being a small business. Right. There's obviously going to be factors outside of that, and we're going to go into some of those. Right. Especially product by product and kind of, situation by situation here. As far as the SBA goes, this is, there's a few different products, right? The most common type of SBA is technically the 7A. And the reason that it's the most common is because you can use it in so many different ways. Right. When you can apply funding as a business owner in multiple areas, or a variety of areas. And you might ask what I mean, but the difference there is, well, if you were purchasing equipment and real estate, you can use an SBA 7A for both. Or if you were purchasing real estate or equipment, you could use it for both, right? So it's really important that you understand that is what makes, flexibility makes the product, right? 504 is much different because this is strictly used for real estate, right? And it's typically a larger type of a transaction, right? There has to be that asset tied to it. Whereas the 7A, as long as you can show like typical working capital utilization for the funding, things like marketing, things like, increased payroll for hiring, if this is all part of your use of the funding and you can show that to the lender, they'll approve that as your use of the funds and you can get access to that.
Indeed. That's right. Yeah. So, I mean, that's certainly the biggest difference right there between the 7A and the 504. The 7A having more working capital available uses of proceeds, whereas the 504, as Tony noted, always going to be secured by some form of a heavy asset like real estate or heavy equipment. Real estate can certainly be used for acquisition and construction. Only time, and this is a note that's commonly overlooked, the only time that a 504 can be used for a refinance transaction on real estate, commercial real estate, is A, if it's owner occupied. Same with 7A, property has to be owner occupied. And B, they can't be cash out associated with the 504 loan.
Steve, really quick, just to interrupt, what's the threshold there, right? Because you don't have to occupy 100% of the space, correct?
Great question, right? So on existing properties, phenomenal question, by the way, owner occupancy has to be at least 51% of the total square footage. If it's a construction scenario on a 504, it has to be at least 60% of the total square footage.
Great. I really appreciate that because, a lot of people may think, hey, I own a piece of real estate, right? It's a few different stores, but, my store is the flagship, right? As they call them. If you have something like that going on, that's a shoe-in product for it, right?
Absolutely.
And then there's the express product, right? And this has become a fantastic product where you can access up to $500,000 on a 10-year term. It's very similar to the 7A in that it is used for working capital. So, think about it like if you were to, utilize a speedboat versus a sailboat. The 7A and the 504, they're going to be more your sailboat kind of, cruising kind of slow. It's going to take you, what's a quick moving 7A or 504 loan? 3 months,
on the fastest 7A where, there's not a tremendous amount of complex collateral that's involved.
90 to 120 days.
Yeah, you're at least at the shortest 65 to 75, more towards 90 days. And on a 504, you're easily surpassing 90 to 120.
Yeah.
No question.
And then the SBA Express guys, you're talking, these deals can get done. I've seen them in 19 days, 21 days. This is actually the one that we've funded a lot of recently. And what does it take to get this loan done? It's a similar, again, process, as it is for the other ones, right? So why do borrowers look to borrow SBA funding, right? A lot of times when you compare the SBA products versus, your term loans or your lines of credit, or even the cash advance world, a lot of those products, because they're 100% guaranteed by the bank or the lender themselves, and there is no SBA guarantee, right? There is no mitigation of that risk. The terms are much shorter, right? You talk about a 2 or 3 year term loan is pretty much standard these days. Maybe even a year or 18 months, depending on your industry, right?
Yeah.
4 or 5 years, that's really reserved for like doctors, dentists, the healthcare industry, maybe some manufacturers these days. But as far as the rest of how the SBA works, you also have to think about it when the bank or lender doesn't have as much risk, they don't have to associate as much interest, right? So now the product is also cheaper. Not only is the term longer, but the product is cheaper. Traditionally, when you think about a longer term product, that makes the deal riskier, right? The longer the bank or lender has you borrowing their money, the riskier it is for them. So typically, when you get a longer term, you're looking at a higher rate. Oh, excuse me. You're looking at a higher rate, right? So this is where that totally is flipped on its head. When the SBA guarantees the deal, now all of a sudden your rates get cheaper, your terms get longer. And again, you might even have more of a ability to utilize the funds because the SBA is backing your decision to do that. Whereas maybe get an equipment loan or a commercial real estate loan, you're fixed to those uses of funds. You're really kind of capped on what you're able to do with the funding.
Yeah, no, that's a great example. So like in a commercial real estate scenario, if you took like an investment property, or let's flip that actually, and let's just say an owner-occupied property, most banks are going to, if you're cashing out on that property, tapping into that equity, and looking to invest that equity elsewhere, most banks are going to want to see that capital stays in the business itself, within the actual business. On a 7A loan, you have a much wider variety of uses. You can start to get more creative with the capital, especially with the Boost and the Express products such as Boost and Fast Track. We can get even more creative with the available uses of capital. And as Tony noted, with the bank, with the SBA incurring some of the risk, taking some of that risk off of the bank, absolutely, they're much more comfortable issuing rates at prime plus a margin, usually in the range of anywhere from 1 to 2.75. So a fully calculated rate is typically in the range of 9.5% to 11.25% at the current market.
Yeah, and I'll be the first person to tell you those are the cheapest rates you're going to find. So some key requirements, right? When you're talking about borrowing an SBA loan, what are some of the things that you must do, right? According to the SBA, this is not again, if you were to go to your local bank offers SBA funding typically. They may not. But if they do, these are facts of their deals. I can promise you that, right? They have to be a for-profit entity. No non-for-profits are getting funded through the SBA, at least the products that we're talking about, right? It doesn't happen. They have to be a small business by definition, right? Some are, less than 500 employees. Sometimes they look at it in terms of how much money you make, but you have to meet that standard as well, right? Have a feasible business plan. Basically, what this means is that, you can kind of combine this with the demonstrating the need for the loan proceeds. If you can show them that, hey, what I've done so far has been all written out and documented right here, and this is what I plan to do going forward as I get access to this capital, you're 90% of the way there, if I'm being honest, right? Some credit scores, as long as you're not, some of the financial documents aren't out of whack too crazily, you're a shoo-in candidate for an SBA loan. You also can't owe the government money, right? If you have a tax lien, whether personal or business, right? If there's, shoot, I've seen it where somebody gets declined for owing child support.
That's right.
Right? You owe back child support. You can't get access to funding for your business, right? And then this is a fantastic point, and I'm so glad that we put this one in here. This is kudos to Steve because he chatted me this one last night to make sure we didn't miss it. Is that if you are an owner of a business that owns at least 20%, you're going to be listed as a borrower on any loan documentation as far as the contract goes. You will have to be a signer for that deal. And anybody that is a signer on that deal is also going to have to sign a personal guarantee. This is a deal breaker for some people, if I'm being honest, right? This is where you start to see some fallout from the SBA, right? Where people may not go with an SBA loan, right? Oh, we're giving you all these great facts about an SBA. Hey, it's cheap, it's long term, it's high dollar amounts, right? You can use the funding all these different ways. It's like, wait, why wouldn't anybody get an SBA?
What's the negative? Yeah, I mean, the obvious is Tony's noting. Yeah, PG required by any business owner with 20% or more in ownership interest, and they always require a UCC1.
Yep.
So, I mean, those are two big details. We're thinking about strategizing a borrower's capital stack and advising on what products are going to be best to meet their objectives. This is a big factor that we have to take into consideration. If there's additional funding requirements down the line, and the SBA is requiring that UCC1 with that full PG, layering in additional debt for other purposes down the line, whether it be for AR financing or for inventory, or perhaps other equipment uses, could become complex.
Yeah, it certainly does. It's not could, it will. If you have an SBA loan, they're in the way. They're first in line, right?
So,
that's their
that's where strategy is so important with this, right? We're as advisors, that's part of what we have to do as our job, right? And our role here with ROK, we really want to advise on the long term, the big picture, and setting up their debt capital stack for long-term growth.
Yeah, because listen, guys, financing isn't an if, it's a when, right? And when you need financing, think of ROK. No. No, when you think about financing, right, it's really all about, okay, what is my immediate need, but also how do I not mess this up going forward, right? Because the worst thing that you can do as a borrower is have buyer's remorse that you borrowed the money. Right. If you look back 6 months down the line and it didn't help you, you weren't able to take advantage of it. It didn't grow your business in the way that you were anticipating. Well, then it probably wasn't very smart to take that funding, to begin with. Right. Well, that's where that advisory, like Steve was just talking about, kind of comes from is, hey, listen, the last thing that we want to see is somebody not be able to grow their business. Right. We're a loan broker, not to tell you why we're selfish, but if somebody borrows money from us and they grow their business, the next time they borrow money, they're going to borrow more.
Right.
Right. So like our goal is to just be here again when they need the financing. Right. It's not rocket science, right? There's definitely an advantage to us being a loan broker and you guys who refer the business or are loan brokers that are doing this, to having your customers take real advantage of their funding. A lot of the noise that goes on is simply around, hey, take this credit card, it's 0% this, and if you do that, it's this, and everybody that says this stuff, guys, they're doing it for the kickback. Like, nobody's giving you this information for free. At least understand why they're giving you the information, though. We give it out because if you grow your business and we go from $1 million loan amount to $1.5 million to $2 million to $2.5 million, each time you borrow money, yeah, we're going to earn on that transaction. It's just the name of the game, right? Anytime there's a transaction, if I go to Starbucks, I'm spending money, they're making it, right? If I go to the pizza place, I'm spending money, they're making it. It's always food with me. But if I go to the Yankee game, I'm spending money. They're making it, right? At the end of the day, it takes money to make money, right? The best thing that you can be is smart, is detail oriented, is follow these requirements and understand that, hey, is an SBA loan a good option for me or not? If in 6 months you're going to want to take additional funding, the SBA may not be the best option for you. You should really think about, hey, what am I doing with the money? How am I using it? And, could I use an SBA loan in 2 years from now? Is that the case, right? So besides all those great reasons that we just gave you, the advisory services that we just provided, why do people partner with us, right? You guys on the call that are new, it's because of the industry knowledge, right? Number one, right? Getting access to be able to offer multiple products at the click of a button, but then being able to leverage our brand, our marketing, our sales team, the technology, right? You have access to our My Partner portal. Really quick in the chat, who's still with us? Who has access to the portal? Who's logged into the portal this week? I'd love to know. Not everybody at once. I love it. Kimberly, Ray, love it, love it, love it. We got a few people here that are, oh, look, there they come. Now we got it. Yeah, there we go. I love it. I love it. A bunch. I use it every day, Rebecca said. I love it. I love it. Guys, this is a way to self-service, right? Not that we don't want to talk to you. I'm a people person. Feel free to call me. I love to talk. I'll talk at the screen for an hour, so we can definitely talk. But if you're looking to get updates on your deals, if you're looking to get access to marketing, if you're looking to do any of this stuff, guys, it's right there at the click of a button for you. Again, we've made our services very, very easy for you to leverage, right? The SBA, how does it work? What's the application process, right? It's similar to other borrowing, and you really need to just understand. Oh, where'd we go? Sorry, I messed this up here. Where'd we go? Did I mess this up? What are we seeing, guys? Can you guys still see the presentation? Yeah, let me click. There we go. No, they can't see the presentation. All right. There we go. Your screen sharing is paused. It's sharing the wrong tab, unfortunately. Tony did this. It's my fault. That's what I get for trying to click.
Almost there.
Resume share. There we go. Good. All right, we're back. All right.
There we go. Perfect.
Sorry about that. So as far as the application process goes, right? It's similar again to other borrowing experiences. What makes it different is, again, you have to meet that SBA threshold, right? So depending on your industry, depending on what you're borrowing the money for, there's slight variables in there. But again, if you take a look back at that requirement page and you meet those requirements, well, then this is the application process you can expect for sure. Steve, you want to add anything to that?
Yeah, I mean, just a couple of notes, relating to the SBA application process. This is a stringent process. It's not something that is for the lighthearted. It is, very strict in terms of the guidelines. The lenders are going to be very strict in how they review the applicant's information in comparison to the lender guidelines. There's not a lot of wiggle room, right? There's certain criteria that are always going to need to be met. We're always going to need to show how the income is being produced with financial information, like last several years of tax returns, interim financial statements, personal financial statements, with personal tax returns. All of these are absolute necessities when we're preparing a credit package for submission to an SBA lender. So they do look at the income based on an EBITDA calculation, and they use that EBITDA calculation in comparison to the proposed debt obligation to determine what's called a debt service coverage ratio. This is a standard requirement as part of any SBA loan underwriting process. Right? The standard DSCR, minimum DSCR or debt service coverage ratio requirement is 1.15% always. So that what that means basically is that for this borrower, their their excess EBITDA must be at least 15% above the proposed debt obligation for the proposed debt payment. All right. So in other words, if we're proposing annual debt obligation of $100,000 annually, that borrower has to show at least $115,000 in EBITDA, right? 115,000 divided by 100,000 equals 1.15. That allows us to meet the minimum DSCR requirement. So that's always going to be a requirement on any SBA.
I'm going to try to take a shot at simplifying that a little bit, right? So what Steve is saying here is when you take all of your payments throughout the year and you add them up, they have to be 15% less than somebody said, yes, please. They have to be 15% less than your EBITDA, which is earnings before income, interest, taxes, depreciation, amortization, right? So what does that mean? It's a line item in your financial statements, right? That is what most banks are going to lend you money on, is what Steve is talking about, right? Your DSCR is it's one of those hot button terms right now. You get a lot of the influencers out there throwing DSCR around. They don't know what they're talking about, but they're talking about it. That's for sure.
They're saying it.
Yeah, they're saying it. They're saying it. They're like me going through EBITDA.
DSCR. Yeah. Debt service coverage ratio, guys. So it's like, think of it this way. It's like if we've heard of debt to income ratio for consumer loans,
exactly.
It's the opposite. For debt to income, we divide the debt by the income. For DSCR, we divide the EBITDA or the income by the debt.
Yep, exactly.
So it's just a reverse equation.
Exactly. And again, guys, just so you know, this will be available through recording. Everybody will get a copy of the presentation. And just if you have questions, again, there's the Q&A. Please. We already have 15 questions in there, so please drop those things in there. This is keys for success as a broker, right? When we were looking at putting this thing ahead, right? And putting this presentation together, it was more along the lines of like, hey, how do we educate our borrowers to be ready to borrow an SBA loan, right? Well, if you give this information every time somebody says they want an SBA loan, it may seem simple, right? It may seem simple, but it's effective, right? And that's what's most important about it is, there's very little room, like Steve was talking about before, for wiggle room. They're not gonna go above and beyond, right? What they say they're gonna do is what they're actually gonna do. And when you have a product like that is so black and white, it's the only reason you wouldn't qualify is poor planning, right? We used to say in football, proper preparation prevents poor performance, right? Say that 5 times fast. But no, it's really all about, hey, how do I make sure that before I even apply for this thing, I already know what I'm doing with the money, how much it's going to cost me, how that's going to affect my business, what the growth opportunities are going to be from that, what are the challenges that may come up, right? And outlining all of that. If you have that and you have your I's dotted and T's crossed, like I said before, you're a shoo-in for the SBA.
Yeah, no, and these points here are critical. I mean, this is just based on our experience in communicating with our borrowers, things that we see that could prevent and often prevent the file from moving along the way it really should. The borrower really should be prepared to provide, number one, that executive summary. That really just gives us a little bit of background about the business, a little bit of background about what their financing objectives are, why they want to secure the loan, what a base coverage on what that use of proceeds is going to be. Just quickly covering the broad strokes, right? Yep. When the business was established, what type of industry, where it's located, who the owners are, what kind of revenue it's producing, what its long-term growth goals are.
Bird's eye view.
Right, quick 1 to 2 paragraphs. The financial statements, as we said in the last slide, always needed. Last several years of tax returns, typically the last 3 filed returns, and an interim financial statement. Now, if they haven't, for example, this is like a perfect scenario in this case, given the time of year that we're in, where a lot of business owners are on extension for 23. So in that case, we would want to collect the last 3 years of filed returns, so that would be 2020 through 2022, a 23 year-end P&L and balance sheet, and interim financials, P&L and balance sheet for 2024, perhaps through April or May at this point. And that's always going to be a standard on SBA 7A or 504 loans. And again, then also because there's always a personal guarantee required, there's always going to be a personal assessment of personal income. That means we got to go back the last 3 years of personal tax returns as well, supply a personal financial statement. So again, these are the types of standards that are always going to be necessary when we think about bullet point number 2 there, prepare financial statements ahead of time. And then lastly, that last one, providing a detailed explanation for the use of proceeds, always going to be necessary. The SBA wants to know that these funds are needed to help grow the business, that they're needed to help grow the business. That's the key.
Well, the SBA exists for that reason, right? The SBA exists to promote the growth of small business in the United States. That's why our tax money goes towards the SBA. That's literally what it's for. There's even a service, I don't know if you guys are aware of this, not to go off topic, but the SBA even subsidizes a consulting service. It's called the SBDC, or the Small Business Development Center. I see a question in here about who can help prep deals for SBA loans. First of all, ROK does that. That's what we do. We help borrowers make sure that their I's are dotted and T's are crossed before they get to the lender. We do that. But there is also the SBDC. That's a free service that is offered, that is subsidized by the SBA, that their whole existence is, again, promoting the growth of small businesses in local communities. There's hundreds of them throughout the nation. I wish I knew exactly how many, but I do know that there's over 3,000 consultants for the SBDCs across the nation. There's just on Long Island alone, where we are in New York, there's 4 different centers, right? So a lot of times they're at a local college near you. So feel free to look up the SBDC. They're also a good referral source if you're looking for business, not to go too crazy here. But as far as the borrowing of SBA loans goes, if you aren't well-versed, if you're not a CFO or a CPA, maybe somebody that's been around business for a long time and doing business and understanding how money moves and this and that, you probably do need somebody in your corner to assist. And that's what we're here to do. We're here to help you really, leverage our assistance, right? What does that mean, right? Well, if you're somebody that's going to do it yourself, it means that you need to determine an accurate list of all the required documents, right? Because like Steve was talking about before, if you're buying equipment, it's one thing. If you're buying real estate, it's another. If you're buying both, it's a third thing, right? If you're buying none of those things, it's none of those things, but something else, right? So how do you know all this? Well, experience, right? Understanding your lenders, your banks, and how they work and what their requirements are, right? And then really being able to communicate back to the borrowers, provide advice and real life examples, like Steve was mentioning, about structuring your capital stack. What does that actually mean? That means that, hey, if I'm going to borrow money from, the SBA, my bank, I also want a line of credit. Like, how do we do that? What's the best way? What's the most strategic way, right? Do I use the SBA loan to pay off my bank? Do I use the bank to pay off the SBA? Where does the line of credit fall in? Am I using the line of credit first and then paying that off with an SBA? So all of this stuff, guys, that's where, the advisory service comes in, right? We offer personalized guidance from pre-application to application to approval, right on through funding and ultimately servicing of the loan as well. If you have questions throughout that process as a borrower, you can always reach out to ROK and connect with us, right? We're also going to match you with the right product. And, we haven't gotten a chance to touch on too many of the other products yet. I'm not sure if it's the next slide or the slide after that. But you'll see that these different products service different needs within the business, right? And that's where you can understand, hey, not only is it about what the borrower's qualifications are, but also what are their needs for the capital and what does that look like? And how do we use their need to go get them paired up with the best product, right? And that's really the service, that's really it. Double check all your paperwork, right? We have James, who's our founder and executive chairman. He's got a famous saying: "It's measure twice, cut once." Right. At the end of the day, if you were to double check and triple check all of this stuff before applying, I can't tell you how many times people put the wrong thing in the wrong field, and it costs them tens of thousands of dollars, hundreds of thousands of dollars. I know of one lender off the back of my, off the top of my head here. They're, as far as up to 100K goes, they're the best product out. And they have cheap rates, they got long terms, they're phenomenal. But if you mess up the application process at all, you got to wait 90 days to apply again. Right. So if you were somebody that could get 100K and they move quick, they're not an SBA lender. They're usually 48 hours to get you your capital. Imagine in 2 days you could have 100K in your bank account, and because you moved your DBA name where your legal name was supposed to be, or your legal name was where your DBA was supposed to be, it cost you 100 grand. So double check all your paperwork, guys. Like I can't stress that one enough. Like, don't believe me, just know that experience is the best teacher, right? And start the process early. A lot of people think, hey, I'm going to wait for my need to go find the capital. The savvy business owners usually have the capital in their back pocket, and then they're finding the needs, right? They've been able to keep their financial statements up to date, their financial health where it needs to be as a personal, on the personal side and the business side, right? And then again, just kind of manage all of these things effectively, right? You can improve your credit score by, paying down your utilization, or potentially getting access to being an authorized user on a high limit card or something like that. There's a ton of different ways that you can leverage, credit to be able to meet the minimum. Steve, I don't think we touched on that. What is the credit score minimum on an SBA?
That's a really good question, actually. This is a gray area, because this actually varies from bank to bank in terms of,
I'm so glad you said that,
which specific bank you're dealing with. So what does that mean? So a standard that you're typically going to hear from most SBA lenders is nothing below 650. Certain products require a minimum of 675, for example, like Boost and Fast Track. Certain lenders, although the SBA can allow 650 or even lower credit scores with strong compensating factors like strong cash flow, or strong collateral, or a very long time in business, a strong industry. These are factors that can compensate for a lower credit score. Some lenders will even go down to 620.
Well, that was what I was going to say.
But again, this varies, right? So the lender itself has to be the one that's open to the lower credit score.
Correct.
So that's really where you got to start. Even though the SBA has criteria, the bank that's issuing the loan gets to layer in their own criteria on top of the SBA's criteria.
And that's where you have this misunderstanding, right? Is you're not only meeting the SBA criteria, but you're also having to meet the bank or lender's criteria, right? And lots of banks don't like certain industries. Construction comes to the top of mind. Restaurants come to the top of mind. You got a restaurant with less than 5 years time in business, there's not a bank in America that wants to lend them money. They don't care if the SBA is guaranteeing it or not. So if you are going to go get money from a bank, and you are going to be in the restaurant industry, a lot of times, and if you got less than 5 years in business, what I see, if you're year 3, 4, 5, is you got to be 720, 750 plus on your credit score. Again, it's going to vary industry by industry. It's going to vary business by business. However, the actual criteria, like Steve mentioned, can go down as low as potentially a 620 in certain scenarios. So, this is why you do all your homework on the upfront. You make everybody submit all the documentation, you go through it, and you just make sure that as the broker, if that's the seat that you're sitting in, you're really dotting your I's and crossing your T's, because the last thing you want to do is go apply for an SBA loan, spend 3, 4, 5 weeks with a borrower who was never qualified to begin with. You can easily have positioned them into a product that makes more sense.
One quick point I just want to add, so we avoid some misconceptions when we hear about credit scores, we talk about credit scores. And this is something that's going to be relevant not only to the SBA, but any conventional product or many types of loan products. Right. So in this point is critical in that not every 620 or 640 or 680 credit score is made equal, right? So when we're saying, we got banks that could potentially go down to, the sub 650, 620 to 650 range as an SBA lender. Well, yeah, that might be the case, but it's not the type of 620 score with tons of delinquencies and open collections and tax liens.
We're going to need to do a credit webinar.
Right. This is more, the borrower that's just overextended, has no real delinquencies. They're just overextended and their credit scores are low as a result.
Yeah.
It's got to look clean.
They've borrowed money on their credit cards. That's why their score is low. But they probably have a really long history. They probably have a mortgage on there. Right. You may say, well, why do you need a mortgage? Well, it just shows that you can afford and go buy a house and go through that process and make that payment. You probably can do the same thing with an SBA loan. Right. So not all credit scores are created equal. That's probably the best piece of advice that you can get on today's webinar.
Often overlooked statement, right?
Yeah, for sure. And every credit repair agent guru out there, they're going crazy that you just said that. Oh, but what about the 750? Yeah, well, if it's got one trade line, it doesn't matter. That's right. Especially if it's new. So again, just touching on some benefits to being a partner here, right? You can obviously earn a commission on every transaction that we fund together. The best part is you're building a book of business. You can leverage the residual. Like I said, capital is not an if, it's a when. And when these borrowers borrow money through ROK, you get paid every single time, right? You get access to multiple points of contact on the partnerships team, our various sales teams. If you have a borrower that's working with a particular rep on a particular deal, you can go right into your portal and write notes back and forth between you and that rep, and they can get back to you in real time. Anything that you guys do in our portal shows up in our CRM, and anything that we do in our CRM shows up in your portal. It's literally the same thing. So you can, whatever you guys do, we're going to be notified and be able to take action on, and vice versa, right? If we make updates or there's things that are going on, you're going to see that in the portal. The last thing is you can leverage us for all of our marketing, brand, and any of our training support, right? I saw a question earlier from somebody about the mission statement. Can they utilize our mission statement? Absolutely. Feel free. You can certainly utilize it. Any of our marketing that you see on in the portal is certainly up for grabs. Any questions that you have about that, you can always connect with your point of contact about how we can leverage that stuff together. Inside of the portal, just to piggyback on that for a second, we did just also drop email templates. If you do know about the email templates, I would love to hear from you in the chat right now. And if you don't, I still want to hear from you. Yes or no? Do you know about the email templates in the portal? No, I did not. Not aware. Definitely got to talk about them then, yeah, right? Yeah. So shout out to my yeses. Here we go. Anthony Carter, Kathy. Love it, love it, love it. So just a few weeks ago, we went live with the ability to utilize some email templates. Depending on what experience you have with your customers and what your referral experience is, there's 3 different kinds of email templates in the portal. You have ROK branded, where you can brag about all the great things about ROK. You have co-branded, where you can brag about all of the great things about ROK and your company. Or you have the white labeled experience, where you can brag about your company, but utilizing our templates to do so. Again, how you set that up is totally up to you. Same thing with your landing page settings. You can update those to provide the same type of experience, right? So if you were going the co-branded route, on your landing page would be ROK's logo and your logo. And then in the email, it would mention ROK and your business as well. If you were going the white labeled experience, it would be strictly your branding, your contact info, as well as your stuff in the emails themselves. So definitely make sure that you guys, if you haven't had a chance to click around in the portal lately, there's lots of new features in there. There's affiliate ads, there's banner ads, there's more training than ever. There's been added flyers and resources. So go ahead, click around. It's mypartner.io. Right? Oh, I sent it to hosts and panelists. Sorry, give me 1 second, guys.
Wrong group.
Yeah,
Wrong group.
yeah. We're gonna attempt that a second time. Let's get that message to everybody. That looks right. All right, let's keep it pushing. Some of our programs, right? So a quick breakdown of what we do and how we do it, right? It's just a few different products that allow us to service a wide range of borrowing needs. As far as like unsecured or not tied to any assets, we have term loans, lines of credit, merchant cash advances, and small business loans. Those are really kind of interchangeable. It depends on where the borrower qualifies and what they're exactly using the funding for, as to what product that would be best for them. Sometimes it's a shorter term line of credit or cash advance. Sometimes it's a little bit longer of a term loan, or small business loan. It really, kind of varies. And then we have our secured side of the business where Steve kicks in, and, this is all the verticals that fall under Steve and his team. You have equipment financing, you have asset-based lending, you have commercial real estate and residential investment properties. And then today's topic, the SBA, right? Every one of these programs here are designed to help business owners take advantage of opportunity or solve challenges, right? That's really what it comes down to. When you have these different scenarios and you have these different borrowers, the means to getting access to capital becomes a real important topic, right? So as you're working with business owners, whether they're in your network now or they're going to be in your future, it's a good idea to understand, hey, if I'm working with ROK, this is what they do, this is how they do it, and this is how I can leverage it.
That's spot on. No, absolutely. These are good explanation of the wide variety of products that we have, as Tony noted. A different strategy for each one of these different types of options. That's for sure.
The one thing I do want to mention is residential investment properties. A lot of people, I saw some people talking about the website earlier. You may be familiar with us promoting fix and flip financing. Fix and flip actually falls under residential investment properties. Think of it like, hey, I don't want to flip the property. I want to hold it, right? I want to own it. I want to build a portfolio of properties, right? So think of it like that. You're either fixing and flipping the property or you're buying and holding it, but it cannot be your primary residence, right? That's what it comes down to. It has to be an investment property, whether it's, 1, 2, 3, 4 unit multifamily, it does not matter. Residential investment or commercial real estate, they kind of go hand in hand.
With that, within the area of residential investment, don't just think fix and flip, think ground up construction as well. That includes as well as commercial real estate lending. Construction opportunities are available. We can certainly place those transactions as well.
Quick question I see here from Kimberly in the chat, Steve, is Airbnb.
Oh yes, short-term rentals. Yeah, absolutely. So that will fall. So when you think about residential investment properties, think of it in this way: long-term rental or LTR, short-term rental or STR. Two different realms, slightly different criteria. Both are available. We can finance both types of products. On STR, short-term rentals, a little bit of a higher rate, a little bit of different criteria for calculating the debt service coverage ratio to qualify the loan. Also, a little bit of lower LTVs than a traditional residential long-term investment property.
Love it. And as you guys are coming across these opportunities, that's the best way to kind of learn the ins and outs of these products, right? I know a lot of people are wondering, hey, how do we do this? How do we do that? One thing I've realized, as I've done this for almost 10 years now is I can't think for my borrowers. I was once told by a sales trainer, don't put your brain in their wallet. But this is more along the lines of, I don't know how they're going to use the money. I don't know what actually matters to them, right? You can easily get stuck on, hey, maybe that's not the rate that they'd want, or they'd want a little bit shorter, longer of a term, or even shorter of a term, right? It doesn't quite fall in the criteria. Again, always fall back to why they're borrowing the money to begin with, right? They're here for a need. Somebody's going to service it. If we sell ourselves out of being those people, somebody else is going to do it.
For sure.
The beauty of being ROK Financial is somebody else is just going to refer it to us.
We'll get it either way.
Yeah. Jen's looking at me because she knows she's dealing with the duplicates on the back end. Oh man, gotta have fun, right? Wow, we got a bunch of questions in the Q&A. So let's get this thing start to get wrapped up. Some of you guys that are new here, I know you want to rock out with us. Please, please, please scan this QR code now. Anybody who scans this QR code now, you're going to be speaking with somebody on our partnerships team in just a couple of minutes. This is going to give you access to that Rockstar portal like I was talking about, your multiple points of contact, and ultimately Steve and I. You know what I mean? Like, what else do you need? But no, I'm being, I'm over exaggerating. Nobody's more excited for you to partner with us than I am. I truly, truly appreciate it. I'm coming from when we used to do this webinar, there was 38 people that registered and 16 attendees. We've been well over 150 participants for most of this presentation here. And we definitely are rocking out. So definitely appreciate you guys that are looking to reach out. If you just want to have your questions answered, or you're looking for a little bit more information, feel free to email us, call us, check out our website. Again, that partner portal I did drop in the chat. So if you guys were looking to leverage that or go into the portal, feel free to click around in there. Also, stay tuned for more info regarding our July webinar and sneak info. I heard it's going to be on marketing your service as a loan broker. Right. So what does that mean? That means we're getting all the marketing insights ready for you guys, regardless of product, regardless of industry. If we got marketing secrets, you're going to know about them on the next webinar. So definitely make sure you guys all register for that.